Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for the 22nd through the 26th of June 2020. With only 2 days left in July, it's going to be an exciting remainder of 2020. What possibly could go on in the future in general in the world, right? So, I do believe Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our weekly recap for the 22nd through the 26th of June 2020. We're going to go ahead and discuss the four main indexes, take a look at their performance for this past week, where they're currently sitting at, what is kind of going on in the market. Then we're going to go ahead and take a look at stock futures here on Sunday morning. Look at the entire S&P 500 performance for this week. I know the FANG stocks are now starting to get a little bit affected by what is kind of going out there with the illness. Facebook, for example, took a 10% dive this week, so we could see some deterioration of the FANG stocks that have been helping elevate this market as high as it is now. So if these FANG stocks start dropping and the rest of the market follows, we may see a, pretty hard fall either to where we initially had fallen before, or even further as the FANG stocks do begin to close stores, no longer open for business as Microsoft has recently closed their stores. Okay, so anyways, yeah, we're going to go ahead and cover the S&P 500 performance for this week. Then we're going to go ahead and cover silver, the gold, bonds, mortgage rates, and kind of wrap it up there. Now, I like to do these weekly recaps to kind of keep track of what exactly is going on in the market. I like to be able to have a historical reference, a playlist here. If you look at the playlist, I have a weekly recap playlist where every week for the past year or so, I do these videos. That way I can kind of keep track of on a week by week basis what exactly is taking place in the market. What illness or what political thing is going on out there that is affecting the market, and how does it affect it, because say in 5 or 10 years something like this happens again, what exactly took place in the market? Is it going to be exactly the same? We can always look back at history and kind of use that to help kind of educate ourselves for the future. So with that said, if you are brand new to my channel, have not yet subscribed, would really appreciate if you do hit that subscribe button below. If you do enjoy this video, find it helpful, entertaining, give it a thumbs up. And if you have any comments or questions at any time going over this video, the stock market, dividends, just go ahead and drop it down in the comment section below. I appreciate all the hellos and questions, and let's go ahead and get into the video. So last week, the market was up, but it didn't quite recover from the past week that it had been down. We've been kind of flip-flopping, negative, positive, but we've been giving more negative versus moving positive. So we're just getting weaker and weaker. We're slowly deteriorating here into the future. And this past week, we got hit pretty hard, which we'll cover here in just a second. So we saw S&P up 1.86 last week. The week prior, Dow Jones up 1.04. The Nasdaq did really well at 3.71, and the Russell 2000 was up 2.23%. Now, this is back on the 15th through the 19th. Now, taking a look at this week's changes. So here we are, S&P 500 down this week 2.86. So it basically gave up an additional 1% on top of what it gained last week. Plus the prior week it actually lost a little bit more. So we're losing more than we're gaining. The S&P 500 now sits at negative 6.86. So here we are on Wednesday. Illness is actually starting to increase in different areas as the economy is beginning to reopen. People are going out. There's more cases that are being shown, but what's also going on out there is that they're trying to decrease the numbers that are getting tested, saying the numbers are actually going down. But in reality, there's more cases out there. The illness is still there. It's still affecting people. And while I don't know how harsh it will actually be in the fall, there is the potential of a second wave happening, which happened back in March in sort of spring season. So who knows what will take place, and that's what the market's uncertainty is kind of going forward from this point. Is the market really valued at almost near highs? Year to date of a little bit below 6% with all the earnings that are kind of going on out there. Look at this year to date. look at the big drop as the illness cases skyrocketed. It hasn't gone anywhere. Companies have cut back on their guidance. Their earnings have decreased. There have been dividend cuts on some of the retail, some of the REITs, some of the weaker companies out there. So it's just kind of interesting to see here. So that is the S&P 500 there. The Dow Jones basically exactly the same. We did have the job numbers on Thursday, another 1 million or so, a little over 1 million additional unemployed. I know the number is now sitting at around 50 million individuals out there who are unemployed, who just never got that 2% bonus that they were looking forward to, or the increase that they do on an annual basis, and they've just let go. I know a lot of companies that are closing their doors, a lot of local businesses who are not able to hire because nobody wants to come back to work. I was talking with one who she's looking for some staff to do orders, but she can't just pay them to come back because they're getting unemployment, plus they're getting that additional $600 that they're getting from the unemployment. So they're actually making quite a bit more being unemployed, not having to do anything, just chilling, versus coming back to work and doing something for a job. So this whole thing, it's supposed to be ending here at the very end of July. So we'll see how it transitions. But I believe the current future is that they're going to just decrease it from, I believe it's 600 down to 2 or 300, which is still, a lot of individuals are not going to be encouraged to go back to work. A lot of these small mid-cap businesses that are looking for hire is just very slow. They're going to have to shut their doors in order to, they're not getting the business, they're not generating the income, the revenue needed to pay their expenses, so why should they even remain open and hire employees and such. So it's kind of an interesting area. So unemployment numbers came out Thursday. The whole market here started to kind of retract with the media and illness and a couple other political things going on out there with the whole presidential election just coming down here in the next few months now, just a few months away, between Biden and President Trump. So we'll kind of see how that plays into the market and really affects it. The Nasdaq is one of the only indexes right now in the positive of the four main ones. It is still get hit, it still got hit a little bit at down 1.9%, but it put on a very nice gain last week of 3.73. So the Nasdaq has been actually, faring well during this downturn and has recovered very well, nearly hitting all-time highs of, it did hit all-time highs recently of over 10,000 and it hit 222. So craziness there with the Nasdaq this week, down 1.9%. The Russell 2000. Here is that small mid-cap business. This one's still not operating at its full or even near what it should, what it could. I do think that there's more rockiness in the future for the Russell 2000 and other small mid-cap businesses. I do see a lot of small mid-cap businesses that are getting hyped up here in the short term, but with income, unemployment, people wanting to, not able to spend as much on their wants, I do see that a lot of their, individual spending is actually cutting down. So that's going to affect the small mid-cap businesses here. So stock futures are currently negative, but we will be doing our Monday video, which will kind of discuss stock futures opening on Monday. We'll also be going over what stocks are planning to buy here in July. Very exciting. I always look forward to the next month, especially 2020. I kind of want it to be over already. We've had a crazy year this year. Like every month is just, it's Jumanji right now. It's just craziness every single month. Something's going to go on here in the next couple months that's going to blast the past, what's already happened. So here's the 1 month performance chart. Let's see if I can zoom in without breaking this thing. And there we go. That looks pretty nice right there for the full screen. So up at the top left, we have technology. In the middle, we have communications, consumer cyclical, consumer defense. We have financials, healthcare, industrials, real estate, utilities, energy, and basic materials. So across the board, if you had technology, if your main holdings are technology, your portfolio may have actually held up fairly well this past week. Microsoft, even though they closed all of their stores, which I didn't even know they had stores, and many others at my work were talking about Microsoft closed all their stores. Apparently, they had some 200 stores out there that they closed and will never reopen again. So they're positive by 0.6%. Apple this week, positive by another 1.12%. Apple is just a crazy, you know, I would slap myself for selling Apple as often as I did. I used to have, I think my biggest holding was Apple at one point with around $7,000 of just Apple. And that was when it was worth $160. So here it's doubled. So one of my positions could have, I still hold some Apple about $1,000 or $2,000 worth, but nowhere near where it was and what it was. So every time I see somebody going out there and considering selling Apple, Apple just has an unlimited potential in the future with their services, with their devices. There's really no competition out there for Apple. You either buy an Android, which is just any phone can have an Android on it essentially, or an iPhone. And if you have an iPhone, in your iPhone, and you're in that network of iPhones, iMacs, iPads, you're not going to leave that bubble. So, craziness there. Now, if you were anywhere else, take a look at FANG here. Here we have some weakness in the FANG. Facebook down almost 10%, down 9.51%. Google negative 4.36%. Netflix down 2.27%. We also have, what was the other one? We're missing Amazon. Where are you, Amazon? Oh, right there. Amazon's positive by 0.67%. But still, I do see a little bit of weakness, kind of weakening within Google and Facebook. These have been doing really well this past, during the pandemic. I can say that, and it won't get flagged. But, we could begin to see some weakness here. Financials, as interest rates are continuing to fall. I'm getting a rate of 3%. I put in another offer here this weekend. My first house that I put an offer on, it got, they didn't choose my offer. I offered too low. They accepted somebody else's offer. My wife really liked it. But we found another house that's on the market, has two really nice big rooms for living areas. Then it has 4 bedrooms and has nice office outside area, hot tub. It looks really nice. So we're hoping that we put this offer in here. And interest rates are at 2.75% is what we're getting. 2.75, 3% right now, which is basically matching with inflation. So whether you're buying now and holding for 5-10 years, it's going to be a great opportunity to buy regardless of where the market is at. So I see a lot of individuals not wanting to buy a home because the market is too high. But if you're living and you're planning on living in a home in an area for the 5 or 10 years, even if we do crash this year, next year, in 2 years, with time, 5-10 years out, the market will recover, the economy will recover, real estate will recover. You'll be happy that you're in that home, and you may be underwater where your property is actually worth less. But unless you have any sort of issues where you're going to be leaving in the short term, there's not going to be an issue there. So retail is still getting hit there. I saw my Tanker Factory outlet continue to fall. The only company that I really saw positive this week in my portfolio was DLR, Digital Realty Trust, which is a technology REIT. They do a lot of quick stand-ups for like a DR, redundancy for technology. So kind of moving on. The dollar this week slightly moved to the lower. So we started this week at 97.67. We fell down for a while on Wednesday, then slightly started to recover through the end of the week, basically ending almost flat on the week, just by a little bit here on the dollar. US dollar index is kind of moving slowly down and then kind of gaining it back up. Silver, gold, and bonds all positive this week. We'll notice that last week silver was up by 1.29. This week, silver is continuing to move higher at 0.85. I think it's not a great area to trade in and out of. I think if you're holding silver, it may be a good time to take your profits and just kind of wait for this to kind of simmer back down. You can see here that the highest point recently was back in early June of $17. And from that point, it has just been in this kind of trending sideways here with that little area there. You could say it's been double bottoming, and it has some support here in that $16 range, but until we actually break to some new highs, we don't have a lot of upwards movement. Gold up this week 1.52%. Last week it was up 0.85, so really good there with gold. I'm not sure on the potential for gold. I do think that gold is also running up here. You can see that it is hitting all-time highs here. It hit an all-time high just recently of 166.99, and it's pushing against that wall where we could see gold push into the 170s, the 180s in the future, especially with the way the market is going, as more investors are choosing to move into the materials here in the short term. The market is starting to show some weakness. Maybe I'll move a little bit of cash into gold, silver, and bonds. So bonds, again, positive by 1.9 this week. Last week they were positive by 0.24. Also, the 10-year. So this is a little bit of a flag. I've seen some investors taking a look at how the actual 10-year yield has changed in the week. We were last week at 0.7. Now this week we are sitting at 0.64. So that's a decrease there of 0.06%. So that could be showing some weakness there as well. And mortgage rates fell by, this says 1 basis point, but I had last week at 3.44. It is now 3.42. That's that's 2 basis points, by 0.02% there for this week. So I'm still getting interest rates. I can still find rates out there between 2.75 and 3%. If you have a credit score of over 800, you could definitely find those rates or ask for them. Say, hey, what could I do to get an interest rate of 2.75%? It doesn't hurt to ask. You might have to pay some credits, which you can have. It just kind of gets all wrapped in. So that's kind of interesting. So that is essentially all as far as the whole market recaps. I did post one video this week, kind of going over my stock buys. I did buy 2 stocks on Monday. I actually did post another video on Wednesday. I did share it to my Facebook page. I went over 84 dividend aristocrats this past week. And here it is, the video here. Well, I didn't post a video on here, but I kind of went over the summary of the video. On Wednesday, I released a video where I screened 84 dividend aristocrat stocks. Of these 84, 24 had rising revenue, rising net income, rising earnings per share over the past 10 years. Also, where they're currently trading, they have a higher starting yield versus price for the 1-year mark, which means that during this time frame of the past 1 year, these companies have taken a hit here in the short term, but they have potential where their earnings are still continuing to grow. Their revenue, their income is still continuing to grow. So if you do more research behind these companies, such as Tootsie Roll Company, the Coca-Cola Company, we have Aflac, the insurance company. We have Medtronic in here. We have Walgreens, Boots Alliance, UGI Corporation, American States Water. There's a lot of companies in here. There's also some financials, which I think will kind of get beat down here in the short term. But take a look at some of these companies. We also have VF Corp. I believe that's the footwear. I think I own that one. And yeah, kind of interesting there. And that is essentially all I posted this week. I just shared this out 22 minutes ago here on my Facebook page and over on my Instagram for the changes for this week. So if you're interested in checking them out or following me on Instagram, on YouTube, if you're not yet subscribed, definitely subscribe. And that is going to be it for today's video. So if you haven't subscribed, subscribe down below. Hit the bell to be notified every time I release a new video. Hit the thumbs up if you enjoyed this video, find it helpful, entertaining, and of course, give this video a comment. Go down below, say, hi Brent, how are you doing? Let me know how your portfolio is doing, what stocks you're buying, or what your what you're currently thinking of this market. Are you taking profits? Are you moving a little bit more to cash? Are you investing still pretty heavy? Are you just kind of letting it simmer and just letting it kind of go? I'd like to know in the comment section down below. That was 3 rhymes. So that is it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.